Hello, everyone. Hope you had a wonderful holiday week and that everybody didn't eat too much. We have one more holiday to get out of the way here as far as the New Year holiday, and then we can go ahead and return to somewhat more normal trading environment. So, just hop in here with the dollar index with the weekly. Closed the week off pretty low here. I do imagine that we're going to go ahead and see a little bit of an undoing of what we saw during the holiday trading week last week. Again, this week we have a light volume earlier in the week. I imagine this entire week may be a little bit lower in volume in general, but after New Year's we should see a little bit more of a, like I said, return to normalcy as far as liquidity returning. So that being said, I do think we'll get a little bit of a bounce up here into around 96.80 to 96.85 potentially, and then we'll do another bounce or breakdown, I should say, to the downside here. Lower 96s to higher 95 90s. So that's basically where I see the price moving a little bit of an upside move here to, like I said, around 96.85 ish, and then a reversal and down into the next fib zone, which is around the lower 96 to upper 95 90s. Again, keep in mind we do still have a gap way down here at 95.60, let's call it 95.68. Don't think we get there on the first push, but it is possible. So again, keep an eye out for that, as well as that will be a potential fake break in the near term with a potential for another pop back up into those 96 50s later on in time. So that's what I see as far as the dollar is concerned. A little bit of up and then a continuation to the downside. Now, gold, on the other hand, very interesting week last week. There was apparently a shortage followed by record open interest in gold, so we saw a pretty substantial short squeeze to the upside. Obviously, last week, as most of you saw the video, I was already looking for a bullish move to the upside. It just happened a lot faster and with a lot more power than I expected. So as far as this overall outlook, it still looks to be pretty much intact. So I'm just going to go ahead and remove some of this for now, just to kind of keep the drawing a little bit more cleaner. So in the near term, what I'm expecting to see here is gold kind of bounce around and try to consolidate. Now the level of the pullback is what I'm most interested in. So I'm looking at 1505 to as low as 1500 for the next bounce to the upside, and I do think that it's going to be coming pretty much within the next few weeks, let's say. It could happen a little bit faster, obviously, as last week has proven. So, looking at our 4 hour time frame view, just to kind of get an idea of where we're at with things. Again, we do have on my other templates, we do have a little bit of a trend line here or a channel that we were kind of holding on to. So essentially, that channel kind of comes down into that 1500 area. This is obviously rough offhand analysis here, just to kind of let you all see. The down move would come down to around 1500 for that nice retest, ideally, right? 1505 is another level of importance that could be the low, but again, I'm leaving that 1500 for that retest. Obviously, on my other template, I can see it pretty clearly here. I'm kind of just doing it offhand just from memory because I just did it for the members. So again, I'm looking for a breakdown underneath that 1513 level, which is another area of significance, and that basically goes back to, and I'll go ahead and just show you real quickly. Let me just cut this out of this view. Kind of go back in time here a little bit, if it's even going to let me on this. With the futures contract, it's a little bit different. It's a little bit more difficult to see here, but in essence, if you look back just in this more recent time frame view, you can see that we do have a lot of wick in action here around that 1512, 1513 area. It's easier to see, might be easier to see on a daily action now that I think back. So forgive me for double speaking here, but again, I'm trying to do this with a little bit more detail, off the cuff here, so to say, where I'm not all of my drawings are not in play here, so you can actually see that channel that I was drawing in here. So let's see, that 1513 area, so basically puts us in near that fib, near that 50 fib level. So that's why basically I was kind of looking at this area as a potential for a tighter consolidation range, but I do expect it to break down further, kind of wash out some of the long positions as people book profits, just perfectly normal price action, and then from there looking for another rebound. Break that 1523, then you have a nice squeeze up into the 1540s. So in looking at our weekly time frame view where everything was previously drawn, you can see that that is the level that I'm looking for next after we do get a little bit of a pullback. So 1505 to 1500 on the pullback, and then up into the 1540s as we march on and upwards. Now, I do want to point out one thing. Some of you are looking at your Forex platform, so you're obviously following spot gold. And with spot gold monthly time frame view, I just wanted to point this out. I was looking at this earlier when I was, again, doing the member video for everyone. We're consolidating beautifully at that 50 fib level here. Basically a nice bullish engulfing already. We have a higher low on this monthly candle, and we are pushing up at recent highs. So again, even if we do pull back a little bit here to 1505, 1500, we are closing a much stronger this month than we did last month. Well, obviously we had a lower high and a lower low. This month we have a higher low and an equal high. So again, we are getting ready for this next move to the upside here. So again, bears, good luck to you if you choose to play the game south. Best of luck to you. That's all I could say. Gold looks to be primed for another move to the upside here. Indices in general, just a side commentary. I know I don't usually comment on indices. Indices also look out below, looking for a retest of the break. And I'm not going to go ahead and show the chart, but if you're a technician, you can go ahead and see it for yourself pretty clearly. So that being said, that does add more credence to a bullish upside move here for gold. And again, as I said last week's video, from the statistical analysis that I did, looking at least a 1603 move in gold. So we still have much more upside. So keep it short and simple. 1505 to 1500 as the support levels, lower level support retest that I'm looking for an opportunity to again get back in for another long move. And then obviously a break of 1523 or so will take us into those 1540s pretty quickly. That all being said, let's just go ahead and keep it moving and steady. Natural gas move, again, pretty much in alignment with what I said last week. Break below the 227s, cause a red monthly candle. Here we are, headed into the last few trading sessions of this monthly candle. Again, late Friday we saw a little bit of a short covering rally. Don't get too excited about it. It has a lot of room to go before it can even start to look decent. So it has to get back above 228 just to kind of put in a doji candle here. Beyond that, to get bullish, you'd have to go back in like the 237, 238, and that would just basically mean we're looking at sideways consolidation at this time with a few potential upside shots, but again, no real follow through to be seen here as far as I'm concerned. So as far as what I could see for this upcoming, close to this monthly candle, I still expect to see a dip down at least through 2.16, if not outright test those 203s very soon. I don't know if it's going to happen on this candle's watch or on the next one, but if it happens on the next monthly candle, then again it could look like a double bottom bounce. And again, if it will, in my opinion, bounce off the 203 back up into the 217 to maybe the 220s, 221, 222 ish area, with resistance at the 227 area still looking pretty solid. Again, if you just drop down into your weekly time frame view, again, you can see that we are right in that area of somewhat demand with further push down expected to put in that apparent near-term double bottom, and then we'll get a little bit of an upside swing. Like I said, 220s, maybe 223, maximum 227. That's what I'm seeing at this time. And then we'll see if we go ahead and break below that 203, because once that 203 breaks, it's going to take out a lot of stops. It's going to be a pretty quick move down into 193, and then we'll get a bounce back into the 203 to 216 area, and then chop around for a little bit, and then we'll see if we can get any upside push as we head into spring and whatnot. So again, I still see 160s headed down the line, down in the monthly time frame realm of things. But as far as the near term, looking for 203 to 193, and then we'll see what happens from there as we head into the springtime. So that's what I see for natural gas, and crude oil still looking like it's grinding to the upside here. It looks pretty solid overall. Just had to move that over, so excuse my verbal pause there. So again, it's still riding up along this little trend line here. And if you're looking at your hourly and you're using your moving averages, if you're using the 50, specifically 50 SMA, you'll see that on the hourly, as long as it continues to hold that as well as this trend line, it's still grinding up to what looks to be around 62.90 to around $63, with a potential to squeeze up into 63.40 to 63.45. Doubtful, in my opinion, that we get much higher than that at this time. Again, I could be surprised if it does break that 63.45 area. It could cause a short squeeze higher. Again, just identifying what the price action is doing. Not necessarily that I agree with the action, but it doesn't really matter. It just matters what is actually happening as far as the money pushing prices higher. So again, heading up into the 62.90s, possible to see 63 to 63.40, maybe even as high as 63.45. But again, that's kind of a stretch in my opinion. So 62.90, 63 with 63.40 matching this overall wick, the peak of this wick. So that's what I'm seeing at this time. What's going to change that potentially is, if and when we, I should say, when we do go ahead and get up here at 62.90s, because it looks to me like it's kind of inevitable to get there. But again, I could be wrong. Uh, Nothing's 100%, especially in this business. That's why we use the thing called stop loss so we don't blow ourselves up in the event that we're wrong. So in the event that we do go ahead and hit this mark and we start seeing selling pressure, now the good thing to do would be allow this chop to take place and then the break of the overall uptrend line, and that'll give you that retest of the 59. I believe it's around 59.90 to around 60, let's call it. So just make sure that if you go ahead and get in, you keep your stops tight and wait actual confirmation of the break, not a fake break, because then obviously you'll get stopped out and nobody likes that anyway. So that's what I'm seeing as far as dollar, gold, natural gas, and crude oil. I hope that you all have a wonderful weekend and have a happy and very prosperous 2020 to all of you. It's a huge year coming up in the market here with a lot of indecision. Again, for the first half of January, I do anticipate profit taking from the 2019 rally in indices. So again, that does kind of give more credence to a bullish move up in gold as we see safe havens start to get bid. And also keep an eye on silver. Once silver starts holding on to that $18 level, then that's going to be the cue that it's time to launch back up into the 1920 area. So go ahead and take a look at that as well. If you have any questions, you can email me directly, thetradersperspective@gmail.com. You can leave a comment at the bottom of the video if you all have any questions as well. It's a little bit easier that way, I guess. So in other words, I wish you all a wonderful end to your 2019 trading season and an even better and more prosperous year in 2020. So I'll talk to you all soon. Again, be well, stay safe.